Some positive news from JCPenney after the market closed today, and investors seem to be encouraged enough to buy the stock, at least for now. After the bell, the struggling retailer reported a loss of 68 cents a share, but that was a lot less than analyst estimates. Sales rose 2% to $3.8 billion, but that was below Wall Street forecasts. JCPenney says it expects sales and gross margins to improve in 2014, and that's one reason shares initially jumped as much as 10% in after-hours trading. But JCPenney isn't in the clear. Courtney Reagan has more on the challenges ahead and what some analysts are advising investors to do with the stock.
JCPenney seems to garner an outsized amount of attention every earnings season for the past few years. And with good reason. The 112-year-old department store is now just a shadow of its former self. JCPenney has shed more than $16 billion in market cap since its 2007 peak, sitting under $2 billion today. The retailer was already struggling when it brought in Apple's retail whiz Ron Johnson, though his bold turnaround plan cost JCPenney a 50% stock price decline in his 17 months at the helm. Former CEO Mike Ullman returned to stem the bleeding in April of last year, but the stock has fallen a further 65% in just 10 months. Cash is another concern. JCPenney closed 2013 with $2 billion in liquidity, but some think the department store won't register enough in sales to offset the cash burn and might need to raise capital at the end of this year or the beginning of 2015. Investors are losing faith in a JCPenney turnaround, and analysts are growing more pessimistic about JCPenney's future. While the company's same-store sales were positive in the fourth quarter for the first time in 9 quarters, Wall Street expected more.
I don't think that this is necessarily an imminent bankruptcy, as I think a lot of people out there believe, but I think you have to come to grips with what is going to be the timeline and what's going to be the magnitude of recovery here.
Boss doesn't think JCPenney is a lost cause, but also doesn't think it's likely it will ever be a $17 billion retailer again. JP Morgan isn't recommending JCPenney to its clients, echoing the advice of the majority of analysts covering the retailer on Wall Street. For Nightly Business Report, I'm Courtney Reagan.